Our next guest says brands such as American Eagle Outfitters, Carter's, Crocs, Foot Locker, many of the ones that Courtney had mentioned will actually be impacted by the resumption of student loan payments in October. Joining us now is Michael Zakkour, 5 New Digital founder and author of The New Retail. Michael, great to have you with us. It sounds like a big deal, and it may in fact be a big deal, but there's actually a 12-month grace period for folks if they don't pay their student loans before it hits their credit score. So I'm wondering how you assess the actual impact immediately.
Yeah, listen, even with the grace period, this is going to have an immediate impact. We're hitting the fourth quarter here. This is make or break time for every retailer and brand in America. You know, most brands make and retailers about 70% of their yearly income in this coming quarter. So the timing of this really couldn't be worse. Listen, CNBC has been doing a great job of covering this. You know, we've seen Cameron McNair report that 56% of borrowers are going to be choosing between groceries and paying back their student loans. 70% of college students with debt saying, you know, who are coming out now are afraid for their careers. And so you have this double whammy of two groups really being hit hard. You have millennials who are in their 40s with their own kids going back to school. You have recent graduates. This is going to be a disaster for retail in the fourth quarter.
Yeah, on top of this, households largely have spent down their excess savings from the pandemic, according to the San Francisco Fed. So that's another headwind here in terms of the overall retail puzzle. Are we going to see the most of the impact here for holiday, for Halloween and holiday? I mean, most of back to school is done. So maybe they've spent that.
Yeah, we're going to really see this come to the fore during the holiday season. You know, if you look at what's happening here is we're just becoming a debtor nation, right? And so is this going to have a huge impact on overall holiday sales? No, but it's one more pinprick into the balloon that we're hoping is going to be full for the season. I mean, we're talking about $32 trillion in U.S. debt, household debt of $17 trillion, credit card debt of $1 trillion, and lo and behold, student debt is $1.5 trillion. So even more than credit card debt in the U.S. And so we're telling these mixed messages where we're saying, hey, go out, get educated. That's the key to a great life in America. And then after you get educated, go out and spend, because we're a consumer-driven economy, and we're making it impossible to get an education and spend at the same time.
I don't want to minimize this issue in any way, but in some respects, I feel like we're setting up for, you know, the excuses to start flying from some of these retailers come the next reporting season, right? You're already hearing about shrink being an issue, the degree to which we're not exactly sure, and retailers who have never mentioned it before are now mentioning it. Now I can see a scenario in which this becomes one of those line items of concern that we start hearing about in the months ahead.
Yeah, absolutely. I think that's a great point. You know, shrink has been the narrative. We had a lot of retail earnings come out last week. Most of them were not good. We've seen, you know, Target take a hit, Macy's take a hit. I think the trend that we're seeing there is the traditional middle of the road retailers are suffering. They continue to suffer. I think it's less about outside forces like shrink. I think, you know, inflation is still putting pressure there. But eventually, you're right, the excuses run out, right? So there's inflation, there's shrink, there's student loan debt that they deal with. I think the bigger issue here is there are a lot of retailers in the U.S. who have simply not adapted to the way people shop, where they shop, how they want to shop. You know, this is a much more integrated retail world. It's the integration of online and offline and technology and content. And so we see, you know, a lot of companies who are doing really well. Luxury has never lost any of its steam. Luxury is doing well. The dollar stores, the value stores are still doing well. I think it's a lot of that boring, middle of the road, unimaginative retail.
Well, Michael, sorry to, I mean, we just
well,
saw
I think they're
Dollar
going
General down. It was a disaster in yesterday's session, and it was not the only disaster quarter-wise. I mean, it was a string of quarters that were disasters.
Absolutely, but I think what they're going to see is they're going to, over the next couple of quarters, see that step back up because people really have no choice on where to shop. They're going to look for that value wherever they can. I think dollar stores are more, like I said, victims of not adapting to modern retail and the new retail model. But I expect them to make a comeback as well. But
Michael,
the bigger
I do
issue,
have a question sort of about the impact of consumer psychology. I think when consumers know that they have one more bill, they may not be budgeting super carefully as we're all supposed to be doing, but psychologically they know, oh, now I have this new bill that I didn't before. So maybe that curtails the spending a little bit more than actually taking that exact amount of the payment and taking it out of discretionary income. I mean, how do you quantify the psychological impact of one more pressure on a consumer at the lower income, certainly, who has to feel very pressured right now with inflation still elevated and interest rates still rising? Yeah,
I think that, Cory, it's a great point. I mean, we're seeing it, by the way, this isn't just at the lower income level. We're seeing at the higher income levels with households of over $100,000 in income are feeling this same pressure. It's just one piles on top of another, on top of another, on top of another, and what gives. Interesting psychologically, though, what we do see with consumers is when they see that pressure, they may eliminate spending on physical products, but they are less reluctant to spend it on experience. And it's almost like, from a consumer psychology point of view, their psychology is saying, YOLO, you only live once. Yeah. Okay, so maybe I'm not going to buy a few more dresses, but I am going to go out to the restaurant and the bar and book a trip. And so it's a strange dichotomy with the psychology there.